Hello and welcome. I'm Brian Caplen, editor of The Banker. I'm here with Demetrio Salorio, Global Head Debt Capital Markets for Société Générale. And we're previewing the upcoming annual meeting of the IMF, which is going to be in Bali this year. So Demetrio, thinking about what people are going to be talking about, the first topic that seems to come to hand is emerging markets. And we've seen a lot of pressure, haven't we, in emerging markets, partly due to rate rises. How do you think it's going to all play out?
It does make sense that there is some pressure in emerging market assets at a time where the US monetary policy is changing, when rates are rising in the US, when the dollar is strengthening itself. So it's kind of normal to see flows which are coming out of emerging markets and getting into the Western world, and especially the dollar area.
Investors don't seem to distinguish amongst emerging markets. They seem to include them all in one big bag. Is that right?
Up to a point, yes. But it's true that precisely those countries that had other idiosyncratic problems, as for instance Turkey, with high inflation, and as well some questions on the political independence of the central bank, or Argentina with a lot of fiscal pressure. Those have been the initial focal points where the crisis has unfolded itself somehow. True, there is some contagion effect always in markets. So whenever we see an asset class that is subject to pressure, even if it starts by an idiosyncratic effect, then you could see as well some contagion into others. But what is true is that not all emerging markets are going to be affected in the same way. Some of them is going to be more a medium-term issue to see whether this repatriation of funds will be more severe than we think right now, or whether even there could be an economic downturn caused by the trade wars that we have right now over any restrictions.
Okay, because obviously if we have a trade war, that affects different emerging markets, doesn't it?
Indeed,
and the meetings in Bali, in Indonesia, that's one country that could be affected that way.
It all depends. We will need to see exactly what are the conclusions of the discussions, mostly between China and the United States. We know that China is a very important economic engine in that region, and different countries will be affected in different ways depending on what are the restrictions, eventually the restrictions that are going to be imposed in terms of trade between the US and China.
Okay, now Demetrio, obviously you're involved in bringing issuers to markets of all types, corporates, sovereigns and so forth. How do you manage in a volatile environment like that to find windows of opportunity?
Okay, well, if we talk about the emerging market segment, at this stage the market is not very active. We need to wait to see where prices are gonna settle. We need to wait for the waters to calm down a little bit, and then we'll see. But the volatility coming from emerging markets, but as well from other factors, is as well affecting Western markets. So we are living in a world right now where spreads are more volatile, rates are going up, and as such, borrowers need to change the way they approach markets to make sure that they execute transactions.
Because I think another topic will probably be the situation in Italy, both the political and economic situation to be discussed at the IMF.
Absolutely. Well, Italy has been a focal point for investors over the last few months, especially because the coalition government had been given some signals in terms of whether they were going to comply or not with the fiscal rules coming from Europe, and that has triggered a very bad performance in the Italian sovereign bond, the BTP. But it's a political problem. Italy fundamentally it's a healthy economy as we speak. It's growing quite nicely, like the rest of the Eurozone. And for instance, over the last few days, we have seen some encouraging signs from the coalition government that they are going to be operating under the restrictions indicated by Brussels. And for instance, the market has reopened. And over the last 3 days, we have executed a flurry of corporates coming from Italy at very good conditions.
Okay, so tell us about one or two of the deals that you've managed to get away recently.
Well, listen, over the last few days, the Italian sector has been quite active on the corporate side. So we've been able to execute transactions for Snam, which is an Italian network operator, transactions for CNH Industrials as well. And in all these cases, we had multi-billion books in terms of orders from investors, and we were able to execute the transactions with very tiny new issue premiums. Another deal that we have executed yesterday is the Kingdom of Spain, huge inflation-linked transaction, 15 years, and we were able to assemble a book of 17 billion. So, we can see that whenever the political elements are out of the way, there is still a lot of appetite from investors to get exposed to Italian assets and to Southern European assets.
Okay, and so what is the pipeline looking like for the rest of the year?
Pretty active. I mean, this is a year where volumes are down in general terms, and we are expected that volumes will be down versus 2017. Let's not forget that 2017 was a record year in terms of supply. In addition, many borrowers have somehow postponed the decisions in terms of issuance just to see where spreads and rates were gonna settle down. And when we look at our pipelines and intentions to issue from our borrowers, we believe that it's going to be quite active looking forward.
Demetrio, thank you very much.
You're welcome.